Today, Shanks Group plc reports results for the year ended 31st of March 2013. I'm joined by Group Chief Executive Peter Dilnot to discuss the key points of the announcement. Peter, thank you for joining me. Profits are down despite the delivery of some £6 million in cost savings and securing of new contracts. Can you give me some more colour?
Yes, revenue and profits are down at an overall group level versus prior year. But it's important to put that in the context of our divisional performance and the markets we're facing. The issues we've had are really around our solid waste division, and in those markets we've endured ongoing price pressure and also volume declines. However, the other three divisions have all performed well, very much in line with expectations, and have delivered growth throughout the year. The other part which is important here is about our cash, and we have managed cash very carefully, and as a result we've ended the year more strongly in terms of our balance sheet with a net debt to EBITDA of 2 times, which positions us well for being able to fund our investments going forwards. And also reflecting our confidence in the future, the board is recommending a maintained final dividend.
Could you have done more to offset the solid waste issues?
Well, I believe we have taken decisive and effective action in the face of some tough markets. It starts with a reorganisation of our group around market-facing divisions, so we're clear about where the issues and the opportunities lie. That reorganisation was implemented this financial year, and we're reporting against that new organisation for the first time in these results. In addition to that, we've announced at the half year a cost programme, a structural cost programme, to take 20 million of cost out of the business by the financial year 2015, and that's equivalent to over half of our profits from last year. We're well on track with that programme, with over 50% of those actions over 3 years being taken in the last 6 months, and resulting in some 310 people having left the business this financial year. So tough actions, but I believe decisive ones in the face of some difficult markets.
That's fine, but could it get any worse? Have we reached the bottom yet?
Well, the reality is that our markets remain tough, particularly in solid waste, and in our largest market, Dutch construction, we're continuing to see headwinds. Having said that, we are seeing some stabilisation in terms of price and volumes, and some capacity is coming out from the industry. So I'm not expecting things to improve in the short term, but longer term, of course, there will be a macro recovery. And when that does come, our business will be well placed to capitalise on that in terms of operational gearing.
So moving away from solid waste, can you summarise your performance in other divisions?
Yes, we have 3 other divisions, all of which are performing well. The organics division is up 11% in terms of revenue, mainly driven by a rollout of our UK assets, ongoing good performance where we're a leader in the Netherlands, and also a very promising funnel of opportunities in Canada. Hazardous waste has performed well and has maintained record profit levels from last year, with particular gains in productivity in our Rhyme industrial cleaning business. And then finally, the UK municipal business is up 80% in terms of profit versus last year, primarily driven by the rollout, the successful execution of contracts in our pipeline and ongoing operational performance. So in aggregate, those 3 divisions on track, in line and delivering growth.
You've described the year as transformational. That's rather a bold claim given the outlook.
Well, I believe we have made some profound changes to our group this year. And it starts with the reorganisation of the group to these market-facing divisions, and that is a completely new orientation in terms of management focus and actions. I've already talked about the structural cost programme, which is well underway, but will reposition the group going forwards over the next 3 years. We've already started to actively manage our portfolio, shedding some non-core assets, and we've sharpened up our strategy to be much more focused in terms of the actions we need to take to deliver growth from this business over the medium term. So in short, I do believe the actions we've taken partly are to offset the short term, but also position us well for the medium term.
So what are you actually doing to achieve that?
Well, let me give you some more colour about the specific strategies and the actions. So in solid waste, which remains our largest business in terms of revenue, it's all about improving the profitability. So we're focusing on cost, on scale and productivity. Organics and hazardous waste have a similar strategy in the sense that we're investing for growth with new infrastructure and capacity where we are advantaged and we can generate superior returns. And then our fourth division, UK Municipal, we have a strong pipeline of opportunities and contracts which we're bringing online and at the same time delivering operational excellence from the many contracts we've already got. So those are the four clear strategies, the actions that are ongoing, and that's underpinned by activities at a group level which will accelerate the whole.
Where do you see the business over the longer term?
Well, I think we have got a path towards long-term value creation and delivering increased returns for shareholders. If you step aside from the very real headwinds that we're facing in solid waste, the markets have got underlying strong growth drivers underpinned by regulation which continues to get passed even in these austere times. Our cost programmes are on track where that's needed. Our investment programme is delivering its target returns at over 12% post-tax. And ultimately, we'll also have a macro recovery when that comes and we're well positioned. But we have a clear path towards delivering returns, and that's absolutely what we're focused on.
Shanks Group plc Chief Executive Peter Dilnot, thanks very much for joining me.
Thank you.